Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman, Portfolio Manager at PI Financial in Vancouver. His website, PIFinancial.com. He also has another website, PolarFuturesGroup.com. Welcome back to the show, Drew.
Thanks for having me again, Jim.
Well, it's been a market full of uncertainty of late, especially because of the tariffs. Are trade wars the biggest worries right now?
Yes, they are definitely the headline grabbers. They are front and center. And, of course, going on right now is going to be a $34 billion worth of goods tariff on Chinese goods coming into the U.S. And, of course, pretty well, as soon as that comes into place, the Chinese have the reciprocal tariff coming on U.S. goods going into China. So that is the big uncertainty. But if you take a step back, I think it's worth looking at and seeing that Trump has really been a disruptor is the word that we've been using for him. Whether that's been in trade, and that started not just with these latest round of tariffs, whether that was NAFTA right from the get-go, but in other places as well. I mean, you can look at the oil market. I mean, we've seen big moves there, and obviously that disruption came from the Iranian nuclear deal that Trump pulled the U.S. out of. So trade wars are a symptom, I guess, of this sort of disruptive personality that Trump has. You know, he got elected on, a wave of populism, and that doesn't seem to be dying down, and I don't think it will going forward. I mean, he was elected with a mandate, and he's following through on that, and we continue to see that Trump, maybe more often than other politicians, has sort of gone forward and done what he said he was going to do, even if we didn't like what he was going to do and maybe hoped that he wouldn't follow through on it. But he does have some support, and I think as you have the U.S., heading into midterm elections in November, I think he's going to stay with his, campaign style rhetoric to keep things going. And in his words, make America great again. And if you look at what he's trying to do, I mean, it is a slogan, his whole make America great again, but he seems to think he can, quote unquote, win at what he's doing. And this is the way that he's sort of disrupting, I wouldn't just say, equity markets. We've seen it go through currency markets, but trade wars are definitely kind of front and center. But again, I would say that's sort of just the, latest disruption that we're seeing out of Trump.
China says it's going to aim its tariffs at particular areas where Trump got his votes. That would be pork producers, Tennessee whiskey, Kentucky bourbon.
Yeah, we're seeing it in a lot of red states that are maybe a little bit more targeted. Ag products, so soybeans, obviously a very big worry. That's a huge export. Even the potential of crude or energy tariffs. So again, everybody knows the midterms are coming. The president needs, to have the House and the Senate working together in order to get things done. Otherwise, you end up with a lame duck president that really isn't able to push through or make the changes that he wants to change. So I think you're going to see, again, Trump really, stand up and maybe even go back to that, more brash sort of campaign style rhetoric as we go into these midterm elections. And at the same time, he might be willing to take small victories where he thinks he can get them. So that would be the positive hope going forward, is to say, he wants to get some victories, under his belt, or more victories under his belt before he gets into that midterm election phase. So that would be the hope going forward, and other countries would do what they can to sort of push the buttons against him, and or take out that support from him going into the midterm elections. I think they will be a key piece of the puzzle as we go into the fall.
Trump has said he doesn't want NAFTA completed now until after the midterm elections. Is that to give his tariffs more time to inflict pain and remind people of the dangers of getting into a trade war with the U.S.?
I think it may be just a sort of a what's the best way to phrase it? Would just be a possible way to make it happen. I don't know that there's enough time for it to get through the House and Senate with the policies and procedures in place. It was Paul Ryan who, the Speaker of the House, was sort of putting the deadline on NAFTA, and I'm going to say that was a month or so ago that passed. They thought they could actually, ratify NAFTA and have it signed off on before going into the midterm elections. So now that we've passed that date, it's sort of, okay, now we have to sort of wait and see what our new government's going to look like before we can think about, moving new initiatives all the way through government. And of course, we are through the Mexican election now, so that is behind us. And I would say on the NAFTA headlines, there's definitely maybe some hope that the new president down in Mexico and Trump could possibly get off on the right foot. That isn't been maybe the implied stance, but you never know how these things can work out. So I think, yes, we're going to be in for a little bit more pain just because we will have to wait going forward with NAFTA. But at the same time, hopefully they can use that time to come together in some constructive talks and be moving forward.
We'll have more with Drew Zimmerman right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, would it ease trade tensions between Canada, the U.S., and Mexico if Mexico and Canada adopted the U.S. dollar?
That's a far out there question. You can always say that it's the weaker countries in a trade zone can always devalue their currency to stay competitive. And in a way, you can see that's definitely what Mexico has done since the original NAFTA agreement was signed. Canada's currency is, largely unchanged since the original NAFTA agreement was signed. So, there could be some benefit in a currency that stays more equal. But then at the same time, I think the currency is a tremendous shock absorber for when a particular country gets hit with tough economic times. That currency automatically reacts to sort of counterbalance some less competitive forces that are going on within that country. So I don't think it would be a realistic position for North America to move to a single currency. I think we see some of the struggles that the Eurozone is having without having some of the weaker countries having that currency shock absorber. It's been much harder for them to compete and kind of get back to a stronger economic level. So I don't think that's a road that would be a reasonably talked about subject going forward. I just don't see how that would work well for the North American, or if it was going to be a North American currency.
Yeah, you just gave the example of the Eurozone. I mean, now when you have places like Italy and Greece facing economic problems, whereas Northern Europe, the Scandinavian countries, and Germany are doing well, there's been talk of maybe a Northern Euro and a Southern Euro. So depreciating a currency, probably a good idea if you're really in economic trouble?
Exactly. And like I said before, it is that shock absorber that really comes in. I mean, if you're a German and you want to go on a holiday and you can go anywhere easily within the EU, but if Greece had a different currency and all of a sudden it was half the price that it was before, you're going to be much more inclined to go to Greece for your holiday. Or if you're going to buy olives, you'd buy your olives from Greece because, again, they would be half the price they were before. So that competitive fluctuation happens, and it happens quickly. And, I mean, we're seeing that, again, to come back to the headline of trade wars. I mean, people are saying China is all of a sudden devaluing their currency, and we have seen a large devaluation of their currency in the last 2 months. I think it's over 7%, which for big developed countries is a large move in the currency. So has that been a natural reaction because of the trade war fears sparking up and that China would handle it less well than the U.S. would? Again, U.S. can be a very self-driven economy, although they get a lot of product out of the Chinese economy. But at the same time, that will help with any issues that are going forward. So if they're facing these tariffs, but they've had a 7% devaluation in their currency, that will help smooth things out. It's almost like, as I said, a shock absorber. So you picture a car going over a rutted road. You've got that shock absorber, so the whole car isn't just getting shaken to death. It really smooths things out. So that's the best way I can say to look at currencies, and why I think a free-floating currency is such a good thing to have in a global economy.
We'll have more with Drew Zimmerman right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol AESDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, let's dig into the oil market. There's been some large price swings lately. Is that part of the Trump disruption?
I would say it's part of the Trump disruption in that the Iranian oil is looking like it's going to come offline and definitely be less viable, whether that's because of oil embargoes itself or whether that's the financial system that is not going to be operating as smoothly in Iran to finance the trade of oil. But we are seeing big disruptions there. However, we're also seeing, continued disruptions coming out of Venezuela, and that has been a big reason why OPEC met and said, Saudi and Russia especially can sort of reach into their excess capacity and bring more oil onto the market because we've seen less and less oil come out of Venezuela and Iran especially, which has given us a, over compliance with the OPEC sort of lower production levels that they were looking for a year ago. So in the last 10 days, we've seen, front month crude oil prices jump over $10. I mean, it's been an incredible move in that time period, just as these worries really sort of flared back up again. But we also had a few very specific things to the oil market. If any of the listeners out there follow the oil curve, it's been very, very active. I mean, the front month oil contract has moved much more than the back months. And that's because we've also had oil outages out of Syncrude in Alberta, where 360,000 barrels a day came offline, and that's supposed to stay offline all through July. So the Cushing terminal, where WTI oil is priced, is all of a sudden having a shortage of oil. So we're seeing the front couple of months, out of this worry that they could be having a shortage, really move up a lot faster than oil priced 3 months from now or 6 months from now, because again, we're not as worried 3 months or 6 months down the road. We know we've got a lot of crude available globally, but we're seeing some pipeline constraints, whether that's out of Canada, whether that's out of some of the shale fields in the U.S., and then also these large declines out of Iran and Venezuela. So I would say there's definitely been some instigation of Trump being a disruptor, especially when it comes to Iran, but at the same time some intricacies that are only in the oil market. And, before we move completely away from oil, I would also say you've got Trump now from his Twitter phone really going out there and, charging hard against OPEC and saying, we need more oil, prices are too high, you're a monopoly, you can't be doing this. And at first everybody, sort of blew it off. That was fine. He was just doing his Twitter rants like he does. It's not going to have any impact. And now we're seeing some stories that back up the fact that this sort of rhetoric against Saudi especially is having an impact, and they're willing to bring some more online. So it's almost like, the crying or the squeaky wheel gets the most grease. I mean, right now, Trump is definitely a squeaky wheel when it comes to high oil prices, because, again, to bring it back to midterm elections, he doesn't want all of America facing hugely higher prices at the pump. Voters will not like it if they're paying $4, $5 a gallon for gas. That's not something that Trump wants to see going into an election period.
Are these oil prices helping to keep the Canadian dollar stronger than it would be otherwise?
Yes, I think so. I think the buoyancy, especially, like I say, the last 2 weeks in crude prices is helping give Canada some strength. We are an oil exporter. We do better in our economy, especially the Alberta economy or Western economy, when oil prices are strong and those companies can do well. So I think it's definitely helping. As I mentioned, we do have some issues when it comes to pipeline capacity in getting more of our energy to market, and that's something that Canada has to work on longer term. But I think if you look at where the U.S. dollar has been generally, the last month or so has been soft. If you look at the U.S. dollar index, stayed around 94, 95, that level for the last month. So that's helped Canada sort of stay steady as well, whereas the U.S. dollar against a lot of other sort of periphery countries, some lesser known countries or emerging market countries, whether that's even the Chinese yuan, the Brazilian real, the Argentinian peso especially, those sort of countries where we're seeing the U.S. dollar continue to get stronger, but against some of the developed countries it stayed steady for the last month. So I do think there will be continued pressure on the Canadian dollar from the U.S. dollar. And if crude prices were to moderate / go back down into maybe the call it $60 range, low $60 range, I think that would take a little bit of the bid out of the Canadian dollar that we've seen over the last month that sort of helped it stabilize.
Given the U.S. dollar is important across so many markets, what impact will these disruptions have going forward?
Again, I think, we've had a stabilization in the U.S. dollar over the past month. I think the U.S. dollar will likely head higher. Again, I look to the periphery countries that I mentioned before, and we're seeing U.S. dollar strength sort of off the radar, off of the dollar index over the last month and 2 months. So I think that can come back more to the domestic markets. I think the euro area is still recovering. They definitely had a slowdown from the turn of this year, well steady, and I'm not expecting a huge slowdown there. Again, I think it's about relative performance, and I continue to see the U.S. market doing quite well. We get strong readings there. We've got an employment report tomorrow. that could give us an indication of where wages are is going to be a very key level. But again, I think that the strong and steady sort of U.S. economy keeps the Fed moving on rates. I think they go every other meeting, so we're going to get another 2 rate hikes this year, which, again, in a relative game against other economies in the world, is moving faster. So you're going to see interest rate differentials continue to move in the U.S. dollar's favor. And given some of these uncertainties and money coming out of emerging markets, it does have that sort of central safety play to it as well. So I am looking for the U.S. dollar to go stronger, which does make it harder for commodities and so forth to do better. But again, I think we're starting to look at a picture of inflation. So I think if we're starting to see more inflation than a really, really strong U.S. dollar, I think we could see some commodities such as gold go up at the same time as the U.S. dollar is going up.
Drew, thank you so much for chatting with us.
Thanks for having me on this week.
My guest has been Drew Zimmerman, Derivatives Portfolio Manager at PI Financial in Vancouver. His websites, pifinancial.com and polarfuturesgroup.com. You're listening to HoweStreet.com radio. Find us on Twitter at HoweStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.